Hey everybody, welcome to the channel. If we haven't met, my name is Jimmy and this is my channel, Taking Trades, where we talk everything day trading. So thanks for stopping by. So today I'm adding 3 more trades to my list of compiled stocks for some statistics. Now, as you know, in yesterday's video and the video the day before that, I started compiling all of my trades and following very specific pieces of information about each trade so that I can help develop and shape my strategy. So I added 3 more today and the results were really interesting. I had 2 winners and 1 loser, and one category is really starting to stand out and shine as a direction to take my strategy. So 2 to 1, 1.5 to 1, and 1 to 1 are the risk to reward ratios that I've been kicking around. And adding these additional trades to that is making something appear that seems to be very clear at this point. So right now we are at 19 total trades, which is a decent sample size. I think it's starting to kind of take shape and come along. So I want to show you those 19 trades on my spreadsheet. I want to show you the percentage breakdowns, and I want to show you the amount of profit that I would have made if I would have risked $20 on every single trade. And obviously you could make it any number. You can make it 50 or 100, whatever you want to do, and just recompile the numbers. But it's really starting to look interesting and I want to show that to you. So let's dive into it. Okay, I'm super excited to jump into this video today. My statistics are really starting to shape up. It's getting very interesting and things are moving in a direction that I didn't anticipate. But because I'm collecting all the data on each of the trades, it's starting to allow me to see deeper into the trades, and I want to share that with you today. So I've got the 15-minute chart here open on Citigroup, and I wanted to show you just initially why I was looking at it, why I got involved with it, and then we'll break it down on a more granular level. So this morning I was looking at it, and as you can see a couple days ago, here's today's trading action. This is yesterday. We had sort of a push up with a pullback and then a breach higher. And then it's sort of just been ranging around and staying kind of in this pocket here. So today when it opened up, my thought was to set an alert down near this breach line where it got breached before. And if that got triggered, I'd flip over and look at it. And if we got a bounce off the bottom and move higher, I would take this position long. So I was long biased on Citigroup this morning. So if I flip over here and I show you my 3-minute chart, you can see this dashed line is the opening of today's trading action. So you can see it pushed down immediately and triggered my alert. So I was really interested going in because it was already at the bottom. I was waiting for it then to pick up and move ahead. But the problem was it was below my breach line. So I needed it to come back above the breach line and then reapproach the line and cross the SMA. So what we got was a cross here, but that's no good because it's below my breach line. I don't want the breach line to become overhead resistance and have it bounce off and drop down. So it broke back above, pulled back down, and I want to turn my trades on so you can see those. And you can see this candle right here, it broke above, started to cross this line. We're now above the breach line. The next candle opened up here. And something that I added today that I've been watching and that is really, I had talked about it in yesterday's video, and today I've just added it wholly across the board, is that when we do get this cross of the 9 daily SMA, I want to see an increase in volume. So you can see as this candle comes in and crosses, this volume candle is significantly bigger than the one before it. And then the one after it's even bigger. So this was very confirming that we had the volume we needed. So when this candle opened up, I went ahead and jumped in long at $70 flat. And I had set a 1.5 to 1 risk to reward ratio on this, and it got executed beautifully. So pushed up to $70.19, and I was risking $20 on the trade, so overall the trade made $30. So really exciting on this, and I went ahead and added that to my spreadsheet. And Before I go to the spreadsheet, however, I do want to show you my other two trades today. I want to show you, they were both on Lyft. So this morning on Lyft, I had seen, so here's today's trading action. Lyft yesterday late pushed up and breached this big high guy, these highs that it had set, topped out here, and then sort of came back down this morning. And because the final push higher yesterday was here, it pulled back and then breached that. So that was my breach line that I was watching. As it opened up today, it pushed right back down to that breach line and triggered my alert telling me that it was within 1 ATR, which if you look down here, you'll see the ATR value. It was within 1 ATR of this line, so I got interested in it. And to flip over to the 3-minute now, you can see, let's see, for today right here. So it pushed down these tails. We got within 1 ATR of this blue line. And then as we got this candle crossing above, if you look down at the ATR, it's 0.38, so 38 cents. So that becomes my stop loss. I double that for my 2 to 1. I take 38 cents times 1.5, and that becomes my 1.5 to 1. And then my 1 to 1 would just be 38 cent stop, 38 cent target. So this first one was set up at 1.5 to 1, and you can see that it pushed up. We got a pullback, pushed higher, and I got my target. So it worked out perfectly. So risk $20 to make $30. Another one that I added in my spreadsheet. It was successful. Then we moved down here a ways. And this is the one that really got me thinking. And when I show you what it did to my spreadsheet, it gets really interesting. So we got another cross here, and you can see, and actually I should show you on this one first. Look at the volume bar right here. You see how it's significantly higher than the one before it? That was the final piece to my puzzle to signal me in on that. And the same thing over here. This candle crossed. There's the candle, the volume bar, significantly higher than the one before. Tells me that volume's coming in. So I went long at 58.12 again for the push higher. And it pushed up all the way to the top here and came within, this top is almost at the $0.50. So 49, I think my stop was at 57. So within 8 cents, and then pulled all the way back and stopped me out. And I know that some people will say, well, if you would have stopped yourself below this low, like maybe around 57, 55, you would have been fine. And that's true. But that was a pretty big stop. And my strategy is to really control how much I'm risking on each trade. So when I declare $20, I mean $20. And I have to be able to make a calculation on the fly to be able to calculate my target and then execute this whole thing. So my thought process when I show you this spreadsheet is going to be, instead of shooting for the 1.5 and the 2, or the 1.5 to 1 and the 2 to 1, I think I need to pull it back a little bit closer to 1 to 1, like 1.1 or 1.15 to 1. And I'm going to show you why right now. So we flip over here. Let me move myself out of the way. You can see in here now, I've got all my trades here. I have 19 examples on my strategy that I'm using right now. And all the tickers, I mark whether they're short or long, my sell target and stop loss on 2 to 1. This is the 2 to 1 ratio. Position size versus whether I just was looking at the rest of the trading day and finding trades that I would have been triggered into, but I didn't take them because I wasn't trading at the time. I just call those back tests. So when you see this, that's what that means. Position sizes, these are all live trades that I took. So, and then I marked here that the increase in volume that I added to the strategy yesterday after yesterday's video, I just wanted to demarcate where I added that. So if we look at the results, 2 to 1 right here, this column, you can see that the current win rate is 42.1%. And if I were risking $20 on every trade, I'd be up $100. Okay, fine. Now we switch to 1.5 to 1, this column. You'll see it's 83.33%, and if I risk $20 on each trade, I'd be up $370. So that's great. That's significantly better than the 2 to 1. But here's the interesting thing. If I go to 1 to 1, look what happens. 94.74%, and I would be up $340. Only $30 behind this one. 94.74%. One loser in 19 examples. And this loser, I went back and looked at it. If I would have been applying this volume trick, so for example, to reiterate, when I get a cross of the daily SMA line here, I want to see a volume bar that's bigger than the one before it. That's noticeable, not just like micro, like it needs to look larger. The volume needs to be coming in. If I would have played by that rule on this trade on PG right here, I wouldn't have taken it because it didn't have the increase in volume. So if you remove that trade, that makes my 1-to-1 play 18 for 18, 100% win rate, and $360 profit, which is $10 shy of this one. Tracking these trades has been unbelievable. Please, if you are trading every day, please put all your trades in a spreadsheet and just start following random, whatever you think is important, pieces of information. You know, I probably don't need to have these two columns. I don't know yet. I probably don't even need this column. But I'm tracking all this stuff just to see if stuff makes sense or if something stands out to me. So try it out and see what you think. It's making a huge difference for me. And my plan now, based on my trading record for 19 examples, when we start trading on Monday, because tomorrow the market's closed, it's Good Friday, so just be aware of that. When we go back to trading on Monday, I'm going to trade with a risk to reward ratio of 1.1 or 1.15 to 1. I'm going to do just above this. And I'm going to increase my risk from $20 to either $30 or $40. I haven't decided which one I want to go with yet. But I'm going to up my risk and I'm going to lower my risk to reward ratio so that it puts me in this category, this column. I've noticed that none of these examples have gone right to 1-to-1 and then failed. They've all drifted somewhere between 1.5 to 1 and 1 to 1. So they've been in between. So I really think that if I use the increasing volume piece of the puzzle and I keep my risk to reward fairly modest, meaning 1.1 to 1, I think there could be a potential for a very solid high win rate on it. So again, people will probably say, well, you need 5,000 examples before you can rely on any data. But an N of 19 is not bad, and for starting out anyway, to start getting an idea of what might work. And it's making it really clear to me that I really probably shouldn't be trading 2-to-1 on this strategy that I'm using. So if I hadn't recorded all my trades, I wouldn't know that 2-to-1 is kind of the dog of the bunch. I would be winning on occasion, losing on occasion, and maybe after time you get a feel for it, but this is just cold, hard data right in my face. It's just saying, listen, 2-to-1 doesn't work. I mean, yes, you'd be green, but if you used a different approach, you would increase your profits significantly. Either 1.5 or 1-to-1 would be much better than 2-to-1. So I almost don't need to even track 2-to-1 anymore. I will because I want to see if anything interesting happens, but for right now, I'm going to stick with something in between 1.5 to 1 and 1-to-1. So if you guys have any questions about this, please let me know. If you need any help with getting this set up or if you want suggestions on what to track, let me know. It's been really, really cool, and I'd love to see your spreadsheets. I'd love for you guys to tell me, like, what have you noticed over 20 trades? You know, are you noticing a trend that's taking place or something that you can eliminate that you wouldn't have been able to see before you started tracking your trade data? So anyway, hope you had a green day. Today was green for me. I won 2 out of 3 trades. Finish the day green. Next week, I'm excited to dive in and really take this data and apply it. It'll kind of be like the beginning of this for me as far as actually taking trades with some confidence behind it. So remember, tomorrow is Good Friday, so no trading. Got the day off. You can go enjoy the sunshine if you have sunshine right now. and hope everyone's well. Have a great weekend. We'll be back at it Monday, and we'll see you then. Thank you.